Great day, everyone. If you all are back from watching the first video, this is the second video of the series, Trading the Gap. This video we will be going over how to trade the gap. Now this is the way I trade the gap. I'm going to show you guys exactly how I do it. Take notes. All right. First and foremost, though, for those who are not familiar with us, we are www.forexbabble.com. We're actually, we provide forex training, provide helpful videos, tips, and strategies, and all that. So go to the website, check us out. So let's just get into this. So from the previous video, you guys remember I pointed out all the areas that's highlighted in blue. These are all areas where the gap had taken place. So now I'm going to show you guys exactly how I trade the gap. Alright, so what I do is with the use of either a take profit, the actual take profit that's attached to your actual order, I either use the take profit, and a good time to use the take profit is, let me say this: when the gap takes place, the gap itself, the gap trade itself, is usually between 95. It has a 95 to 98% profit potential. All right, and the profit is it's very on point. There are a few times when it will not close right away, and there are very seldom times that it just won't even close at all. It'll close eventually, but it hadn't closed yet, or hasn't closed yet. So sometimes the gap might take months, or even sometimes even up to a year to close. So with that, most of the time gaps will normally close within the next day. All right, so that being said, it makes when you locate a gap, the chances are it's going to close. All right, so with that being said, let me just show you something. This is what I do. Okay, the previous candle was here. It gapped down here. So what I would do, I would place my take profit just below the previous candle. All right. So in this case, I would place it below, because price is going to come up to this point, and it's either going to come up, touch this area, close the gap, and go back down, or it's going to come up and as you see, it came up and stalled, just like it did before the gap had taken place. It stalled. It's sort of like a mirror, like a reflection. It stalled, and then it bust through and kept going. All right, so that's just something to keep in mind. If you're out and about, when there's a gap in the market, you happen to see it. Oh, it's a gap in the market, so let me go ahead and put an order in, put a buy in, and attach a take profit just a few pips down, and then that way I can go about my business with family and friends or what have you. And then so that it's going to close the gap. Chances are it's going to close the gap. So that way you will you can take some profit opposed to no profit. All right, so for me, it's safer to just put it below it, even though it gapped open. It closed here, and it gapped open here before closing here for this candle. So what I like to do is still put it below the candle. All right, you can put it up here, you can put it down here, you can put it right there on it, but I practice just below it, whether it's up here or down here. I put it below it. All right, so that's just my practice, and that's just what I like to do. Whatever works best for you, that's fine. All that I can say is practice. Just make sure you make good use of your margin. Your volume management, risk management, and volume management. Make sure you're not over leveraging yourself and your account. Use a proper volume when trading this, because one thing for certain, although it gapped down here, look what happened. Although it gapped down, it still went against the gap itself 35, 36 pips. All right, so if you're trading too heavy, meaning your volume is too heavy, if you're trading too heavy and it gaps down and then you get in, if you're trading way too heavy, this 35 pips could knock you out of the market, blow your account. All right, so so still you have to trade, with, just respect your account. You don't want to over trade yourself. Definitely want to, you definitely want to respect your account and all that. So I would definitely do that if I were you. You definitely want to make sure you're trading at the right volume. All right, because it could possibly go against you before closing the gap. All right, so just like here, it closed here, it gapped down in here. What you could have done, put your take profit or whatnot somewhere around there, and what happened? It closed it out. It didn't take long before it closed it out. It started ranging a bit before it took off, but nonetheless, it closed the gap. This is a case where the gap didn't close. All right, it actually gapped down from here and shot up. All right, so it shot up. Now, although it shot up, this is where, if it gapped down in there, you're expecting for the market to come back down. So you're expecting the market to come back down, and what did it do? It kept going. You see that? It kept going. So it doesn't always close the gap right away, so that's why it's very important that the proper volume is very important. Most of the time majority of the time it's going to close the gap here. Close the gap, fill that gap. It didn't fill it yet, but however, as you see, it could possibly go down and it can close that gap. It's not, sometimes it takes a little time, but it can happen. So let's just, I guess the important thing is to make sure that your volume is right. That way you are not over leveraging yourself and your account. So that's the way you be smart. So here it gapped up. What did it do? It shot down. It shot down. So it closed the gap. Let's go to another one. Here, gapped up. What did it do? Shot down, closed the gap. All right. So that's that. Let's go to this. Here, gap down, close the gap. See that? Close the gap. All right. Here, gap down, close the gap. Here, now check this out. This is one of them cases that I talk about. This is exactly why I choose not to put my. This is why I don't put my take profit right there at the body. I put it even at the wick. I put it below it, because you see what happened. It actually went just below it before it went back down, and it actually opened here and went down. So if you got in here, it went down first and then it kept going down. So that's why the volume management is very important. Risk management, volume management, very important. So it didn't close the gap fully until back here. So that's very important. I'm glad that I was able to point that out. So let's go to the next one, the Euro USD. Gapped up, went back down, closed the gap. All right, here went up, closed the gap. Here, dropped down, went up, closed the gap. Major gap here. Dropped down, went up, close the gap. You see how it stalled a little right at the same area as before, just like before. So very common here. Drop down, close the gap, just started stalling right around the same area, but it still closed that gap. See that? Close the gap. It went down just far enough. This is what I'm talking about. It'll go down just far enough, or it just went down far enough. That's why I like to put my take profit just above the wick or the body, whichever is the lowest, or in this case the highest. So you know, because we were waiting for it to go down, you put it above it. So in this case, I could have closed out that trade because, you know, I didn't have it way down here, which if I had my take profit way down there, I would have to wait all the way back here. Now that's provided I waited for the take profit to shut itself down. I could have just shut it down when it came down around that area manually. So you know, it's still an option. So I just wanted to show you guys exactly how I trade the gap, what I find to be useful. More importantly than anything else, make sure your volume is right. That's very important. And then also make sure you make use of your zone. You know, draw your line, draw your horizontal line in. So sorry you guys. It's late. I'm making videos. I'm doing exactly what I love, but I also get tired. Nonetheless, put your lines just above it. If it gaps up, because you got to go back down, put it just above the previous candle. If it's gapping down, put it just below the previous candle, because you got to go back up. All right. So I just wanted to provide this video as great insight for you guys with trading the gap. It's a very high probability trade strategy, one that I use quite often. And you know, once you learn how to do it, it's pretty simple. You will also realize that you can make great currency on it. All right. So as I always say, you know, if you're not familiar with our website, go to www.forexbabble.com. Take a look around. We offer training. We have a lot of tons of free information, knowledge, just like this video, to help you guys out, those who are looking at Forex for the first time. Take a look around, and if you have any questions, feel free to email me. I'm always available. Also, if you like this video, please like it. Also, subscribe to my channel, Forex Babble, and that way you can stay abreast of any new content that I deliver. I try to put out a couple videos a day, or at least a couple a week. So I definitely appreciate all the support over the year. Stay tuned. I will be creating another video. The next video will be the third part of the Trading the Gap series, and that will be helping you guys with actually knowing when and where the gap will take place. All right, that's a very crucial part of this whole series, when and where it's going to take place. So definitely watch our third video of this Trading the Gap series. You'll be happy that you did. Until next time, have a great day.